Welcome back to the channel. Today, we're taking a fresh look at IonQ, ticker symbol IONQ, and there are several developments investors need to understand before making any conclusions about where this quantum computing stock could be heading next. IonQ has been one of the most closely watched names in the quantum computing sector, but the stock has also experienced major swings. That makes institutional activity, quarterly results, insider transactions, and Wall Street expectations especially important right now. So in this video, we're going to break down the latest institutional ownership changes, IonQ's most recent financial performance, what insiders have been doing with their shares, and where analysts currently see the stock going. And there's an interesting contrast here. On one side, some institutional investors are significantly increasing their exposure to IonQ. On the other side, company insiders have been selling shares, while analysts remain broadly optimistic, but far from unanimous. Let's start with one of the biggest developments. Handelsbanken Fonder has made a notable move in IonQ. During the second quarter, Handelsbanken Fonder increased its position in IonQ by approximately 41.2%. The investment firm added 38,000 shares to its portfolio, bringing its total IonQ position to 130,200 shares. At the end of the quarter, those shares were worth roughly $6.93 million. That is important because institutional buying can sometimes provide investors with a useful signal about how professional money managers are positioning themselves. Of course, an institutional purchase does not automatically mean the stock is guaranteed to rise. Large investment firms can have different strategies, time horizons, and risk tolerances. But when a fund increases an existing position by more than 40%, it is certainly something worth watching. And Handelsbanken Fonder isn't the only institution that has been active around IonQ. Several other investment firms have also changed their positions. For example, Accent Capital Management dramatically increased its IonQ position, with its holdings rising by more than 170% during the fourth quarter. Eversource Wealth Advisors also made a major percentage increase in its position during the first quarter, increasing its holdings by more than 200%. Meanwhile, Peak Shares established a new position in IonQ during the first quarter. Baird Harris Wealth Management also increased its exposure, while MWA Asset Management opened a new position. Now, there is an important distinction investors should understand. Some of these positions are relatively small in dollar terms compared with IonQ's overall market capitalization. So you should not interpret every percentage increase as a massive institutional bet. For a small existing position, even a few hundred additional shares can produce a very large percentage increase. However, the broader picture is still interesting. Institutional investors and hedge funds collectively own approximately 41.42% of IonQ's outstanding shares. That means a significant portion of the company is held by professional investors. For a high-volatility technology stock like IonQ, institutional ownership is something investors should keep monitoring, because changes in those positions can potentially influence market sentiment. Now let's move to the numbers that arguably matter even more. IonQ's latest quarterly results. IonQ recently reported quarterly earnings, and the company delivered a much better result than analysts had expected on the earnings per share side. The company reported a quarterly loss of approximately 33 cents per share. At first glance, a loss might not sound impressive, but the key point is that analysts had been expecting a loss closer to 56 cents per share. That means IonQ's reported loss was approximately 23 cents better than the consensus estimate. So, while the company is still losing money, it managed to beat expectations by a meaningful margin. But the revenue number is where the report becomes particularly interesting. IonQ generated approximately $80.05 million in quarterly revenue. Analysts had been expecting revenue of around $66.47 million. That means IonQ came in more than $13 million above expectations. And compared with the same quarter last year, quarterly revenue increased approximately 286.7%. That is an extremely significant year-over-year growth rate. For investors following IonQ because of its exposure to quantum computing, this kind of revenue acceleration is one of the most important pieces of the current story. The company is still not profitable, but the business is generating substantially more revenue than it was a year earlier. And that creates a very different investment debate. The question is no longer simply whether IonQ can grow. The bigger question is whether IonQ can sustain that growth while eventually moving toward profitability. That distinction is extremely important. High revenue growth can support a premium valuation, but investors eventually want to see that growth translate into stronger margins, improving cash generation, and a more sustainable business model. At the moment, IonQ remains deeply unprofitable. The company reported a negative return on equity of roughly 22.29%, while its net margin remained deeply negative. So investors should not look at the revenue growth alone. There are two sides to the story. The bullish argument is that IonQ is expanding revenue at a very rapid pace and continuing to develop its position in the quantum computing industry. The bearish argument is that the company remains unprofitable, carries a very high valuation relative to current earnings, and operates in a sector where expectations can move much faster than actual commercial adoption. And that brings us to the stock itself. IonQ recently opened around $46.35 per share. The stock's 50-day moving average was approximately $45.79, while the 200-day moving average stood around $43.15. That means the stock was trading slightly above both of these moving averages at the time of the reported data. For technical traders, that can be an interesting development because moving averages are often used to evaluate broader price momentum. But IonQ has experienced a huge trading range over the past year. The stock's 52-week low was approximately $25.89. Its 52-week high was around $84.64. That is an enormous range. In other words, investors who buy IonQ need to be prepared for substantial volatility. The company's beta was reported at approximately 3.28, which also reflects the stock's sensitivity to broader market movements. A beta above 3 means investors should expect IonQ to potentially move much more aggressively than the broader market. That volatility can create opportunities for traders, but it also increases risk. Now let's talk about another part of the story that investors should not ignore: insider selling. Recent SEC filings show that several IonQ insiders have sold shares. For example, Director Catherine K. Chu sold 2,757 shares at an average price of approximately $55.02 per share. The transaction was worth roughly $151,690. After the sale, she continued to hold more than 62,000 IonQ shares. Another insider, John W. Raymond, sold 3,815 shares at an average price of approximately $55.01 per share. That transaction was valued at roughly $209,863. After the sale, Raymond still held more than 80,000 shares. Across the last 90 days, IonQ insiders sold approximately 9,329 shares with a combined value of around $513,216. This is certainly worth monitoring. However, investors should be careful about automatically interpreting insider selling as a bearish signal. Executives and directors can sell shares for many different reasons, including diversification, taxes, personal financial planning, or prearranged trading plans. At the same time, insider ownership of IonQ is relatively small, at approximately 0.55%. So the market will likely pay more attention to the overall institutional ownership picture and the company's operating performance than to a few individual insider transactions. Still, the combination of institutional buying and insider selling creates an interesting situation. Professional investment firms are increasing positions in some cases, while certain insiders are reducing their exposure. That means investors are receiving mixed signals depending on which ownership group they focus on. Now let's move to Wall Street. Analyst sentiment toward IonQ remains generally positive. According to the latest analyst data, IonQ currently carries a consensus rating of moderate buy. The average price target is approximately $69.92. Compared with a share price in the mid-$40 range, that average target implies meaningful potential upside if the analyst's expectations are achieved. But there is an important detail here. Not every analyst agrees on the same valuation. For example, Northland Securities previously raised its IonQ price target from $55 to $70 and maintained an outperform rating. That suggests the firm sees significant upside from the stock's current valuation. Morgan Stanley, however, recently established a more conservative price target of approximately $49. That target is much closer to the stock's current trading range. Then there is Rosenblatt Securities, which maintained a buy rating and assigned a much more aggressive price objective of $100. Needham also remained bullish, maintaining a buy rating with a target of $65. And there is another side to the analyst debate. Wall Street Zen recently became more bearish, moving its rating from sell to strong sell. So while the overall analyst consensus remains positive, there is clearly disagreement about how much IonQ is actually worth. That disagreement makes sense when you consider the company's profile. IonQ is operating in a potentially transformational industry. Quantum computing could eventually have applications across areas such as drug discovery, optimization, financial modeling, cybersecurity, scientific research, and other highly complex computational problems. But the commercial quantum computing market is still developing. That means investors are often valuing companies like IonQ based not only on current financial results, but also on expectations for future technology adoption. And whenever a stock is priced heavily around future expectations, volatility can become extreme. If the company delivers stronger than expected growth, investors may quickly increase their valuation expectations. But if growth slows or commercialization takes longer than expected, the stock can experience significant downside. This is why IonQ's recent revenue growth is so important. The company is demonstrating that its business is generating substantially more revenue than it did a year ago. The challenge now is maintaining that momentum. Investors will want to see whether IonQ can continue expanding revenue at a strong rate while reducing losses over time. They will also be watching customer adoption, commercial contracts, technology development, partnerships, and the broader expansion of quantum computing. Another key factor is valuation. IonQ's market capitalization was approximately $17.66 billion based on the reported share price. That is a very large valuation compared with a company that remains unprofitable. So the market is already pricing in a significant amount of future growth. That means simply beating expectations may not always be enough. IonQ may need to consistently outperform expectations to justify a premium valuation. This is one of the biggest risks investors should understand. A company can have excellent technology and still have a stock that is too expensive. Likewise, a stock can experience a major decline even while the underlying business continues to improve if investors decide that future growth has already been priced in. So, where does all of this leave IonQ right now? The picture is mixed, but there are several encouraging developments. First, institutional ownership remains substantial, with professional investors and hedge funds holding more than 41% of the company. Second, Handelsbanken Fonder significantly increased its IonQ position during the second quarter. Third, IonQ delivered quarterly revenue of approximately $80 million, dramatically exceeding the consensus estimate. Fourth, revenue growth of nearly 287% year-over-year demonstrates that the company's business is expanding rapidly. And fifth, the analyst community remains broadly bullish, with a moderate buy consensus and an average target near $70. But investors also need to recognize the risks. IonQ remains unprofitable. The company continues to report deeply negative margins. The stock has a very high beta and has traded between roughly $26 and $85 over the past year. Insiders have also sold shares recently, and analyst opinions are divided, with some price targets far more conservative than others. So the real story with IonQ is not simply that institutional investors are buying or that analysts expect a higher price. The bigger story is whether IonQ can turn its rapid revenue growth into a durable and profitable business. If IonQ can continue growing revenue, expand commercial adoption, strengthen its technology, and gradually improve its financial performance, the bullish thesis could become stronger. But if expectations become too aggressive while profitability remains far away, the stock could remain highly volatile. For investors, that means IonQ should probably be viewed as a high-risk, high-growth technology investment, rather than a traditional established company. The quantum computing opportunity is potentially enormous, but the path toward widespread commercialization is still developing. And because of that, future earnings reports could be extremely important. The next few quarters may provide investors with more information about whether the latest revenue acceleration represents the beginning of a sustained trend or simply a particularly strong period. For now, the numbers tell us that IonQ is growing rapidly, institutions remain active, Analysts are generally optimistic, and the company continues to operate with substantial financial risk. That combination makes IonQ one of the more interesting quantum computing stocks to watch. The stock could have significant upside if the company executes successfully, but investors should also be prepared for substantial volatility if expectations change. As always, do not make an investment decision based on one earnings report, one analyst target, or one institutional transaction. Look at the full picture, understand the risks, consider your own investment strategy, and do your own research before making any financial decision. And remember, this video is for informational and educational purposes only. It is not financial advice, and nothing discussed here should be considered a recommendation to buy or sell IonQ stock. If you found this IonQ update useful, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss the next major update. Thanks for watching, and I'll see you in the next video.